All right, so you're welcome back to financial accounting and correction of errors and suspense account. So you're welcome back once again. This is Larbi Premium Educational Consult channel, and we are going to go through this correction of errors and suspense account as an online tutorial to help you to understand certain concepts when it comes to financial accounting. And we are looking at correction of errors and suspense account. So let's get on to it. All right, you are welcome back once again. So basically, error. When you heard of error, what do you mean by error? Error. It's an English word, right? Error. Let's limit ourselves from the accounting. What is an error? Error is generally what? A mistake. So once you heard of error, we are thinking of what? Mistake. I hope that is clear. So when you relate to our course here, or what we are studying here in financial accounting, you're saying the errors are basically mistakes that are made in the books of account. In the books of account, we mean the ledgers. All right? We mean the ledgers. Errors that are made in the books of account, or it can be as a result of what? The misapplication of the accounting principle and then the concepts or the conventions. And one of these principles is the golden rule. That's a double entry system. Once you misapply it, there is an error that is likely to occur in the books of what? The account. I hope that is clear. So that's generally what I mean by what? An error. So generally, errors do occur in three statements. That's general. General errors do occur in three what? Statements. All right. It is either it's occurring in a statement of what? Trial balance, or the statement of income. That's where we declare our net profit, or the statement of what? The financial position, or what you know that's what? The balance sheet. All right. So these are generally statements of account that's errors are likely to be what's found. But most of the times when these errors are to be found, especially in the income statement and in the financial position, it starts from the trial balance. That's the trial balance. Is the first statement that when the errors occurred, it's likely to affect, because all the information in the trial balance will be used for the preparation of the income statement and in the statement of the financial position. So if there is an error in the trial balance, all things being equal, you are likely to have an error in the way you report the items or the figures in the income statement, and that's of what? The statement of the financial position. That is a balance sheet that you know already, right? So basically, we'll be looking at these concepts as we dive deep to discuss other matters on it. But let's continue with it. So generally, we have two classifications of errors. We have one, errors that will not affect the agreement of the trial balance. As we said, the trial balance is the first statement upon which when an error is likely to what? Okay, so once okay, it's likely to affect other statement. That is why we always made the emphasis on the trial balance, that it is an error trial balance. That's where the error can actually start, right? So that's why we are using here the error that would not affect the agreement of the trial balance. You should have go by saying income statement, but before we can get an income statement, it starts from the preparation of the trial balance before we go to the income statement. That's why we use here the trial balance and not any other statement. I hope that is clear. So errors that will not affect the agreement of the trial balance, we also call it double-sided errors. Why? Because the errors, when these errors are committed, they are committed on both sides of the debit and the credit side. I hope that is clear. The reason why it's double-sided here is that such errors are committed on the debit and the credit side. And we are saying that with the double-sided errors, or errors that will not affect the agreement of the trial balance, we are saying that when such errors is committed, it will not throw the agreement of the trial balance out of order. Meaning that the out of order here means that yes, still the debit and the credit balances will still agree, even though the balances that exist in the trial balance are not true, but yes, still they will not agree. I hope that one is clear. So let's say if you should have had a exact or correct balance with 1,000 at the debit and credit, but now you are having 950 at the debit and credit, it has agreed, but there is an error. Both have been undercast or reduced by what? 50. And when it happens like there's an error, though it won't agree. So the fact that it's agreed doesn't mean that there's an error. Alright? So that is that. So yes, to the trial balance will agree. That's what I mean by error that will not throw the agreement of the trial balance out of order. Then the other error is error that is direct opposite to this error that will affect the agreement of the traveler, meaning that when such error is committed, it will throw the agreement of the trial balance out of what order. I hope that is clear. So in that fact, you are going to have one side of the trial balance, let's say the debit to, let's say 200, and let's say the credit to, let's say 150. And when it happens like that, the trial balance is affected, all right, because the debit and credit side has not been what agreed, and so therefore there will be an error. And we have various types of errors that are committed under this classification. We are going to look at them and know how we can deal with them and get to understand how it's okay. All right. So generally, errors or double-sided errors are basically these. Double-sided errors are basically these. Double-sided errors are basically these ones. You have errors of omission, errors of commission, errors of original entry, error of complete reverses, error of not errors. Then error of principal, then error of duplication, then error of compensation, then error for transposition. So what do we mean by error of what omission? We are saying that errors of omission, we are saying that errors of omissions are those errors which is completely not recorded. Here, the bookkeeper, the one recording the item, failed not to record it at all. So you use the word completely not was recorded. That's an error of what omission. Maybe due to, let's say, the oversight or the pressure of work. Because of, let's say, the large or the working nature of the transaction, some may escape the one recording as the bookkeeper, it may escape him or her, or because of the huge nature and the pressure within which you should complete and report the information for management and even external users for their interest, there will be a mistake likely to occur. And when it happens like that, we are talking about errors of what? Omission. I hope that is clear. All right. Then let's look at error of commission. We are saying that error of commission. So here, so before I come to the error of commission, after we are done with the various types here, then we take particular example for each error that we will be looking at in this part. All right, then we know how to deal with them as such. All right, so let's get to it. So that is the error of what omission. It's completely not recorded. So once it's not recorded, if we want to correct it, you record it again. That is all. You record it again. That is all. Then come to error of commission. And then with error of commission, there are those errors, right, that are made in the same class of account. Errors that are made in the same class of account. All right, because the item within which the error is committed bears certain similar names or similar features, and in so doing, such error is likely to occur. For example, taking rent and rate. Rent and rate. We know rent and rate, they are all expenses, right? And we can classify them as out and expense as one classification. So if let's say I should have recorded the figure in the rent account, but I recorded in the rate account. Remember, after all, they are all expenses, so they all will be found at the debit side of the trial balance, isn't it? Yes, the debit side of trial balance. We find the debit side of trial balance. But here is a case that we should record it in the rent account, but recording the rate account, and it won't have any effect on the trial balance, because after all, we're going to have the figure to be a debit side, just that the name has been what replaced with rate instead of what the rent. And that's what I mean by the error of what commission. So errors that are made in the same class of account. So because of that nature and because of that similarity of the names and the pronunciation, we say that always errors of commission have this attribute. Always we say that there are errors that are committed in a wrong personal account, because they bear that similar name, because they are found in the same class account, they have that personal link. If you are to use them as human beings, they have what personal, assuming you are using them as human beings, they have that personal link, and so therefore you always use the word or the statement or the phrase wrong personal what account. So that's generally errors of commission. So for you to correct this error, you cancel out the one that you actually record that was a mistake, then you record the actual figure in the exact what account. And I hope that is clear. So in this case, we record this in the rent account as debit, then we credit the rates account. That will cancel the debit that we recorded. We take a question on it and you understand it better more. So that's error of commission. Then errors of original entry. We are saying that errors of original entry is basically errors or there are mistakes that were made right from the origin. The origin here, I mean, right from what the tables, because that is where all entries start from. Once we start with the collection of the source document, you record them in the appropriate or tables or the journals. So when a mistake is committed right from that end, then it's likely to become what an error of what original entry. So error of original entry are those errors that are committed right from the origin. The origin, I mean, right from their tables. That is where such errors are committed, and they will carry through from the tables to the ledgers, and it's find itself in the trial balance. And when proper investigation is done, we can easily reveal such error. So we call it errors of original entry. So with the original entry, as we are saying, one distinguishing feature here is that it will follow the principle of what the double entry. The double entry will be applied right, but the items or the figures that should be reported in that account should be what's wrong. Let's say the actual figure should have been 220, but they will the bookkeeper, the one recording it, will let's say record as 202, and when it happens like that, it becomes what an error for original, because the original figure should have been this, though he used this 202 at the debit and the credit side, okay? And yes, to agree, because the debit and credit side will be 202, but actually it should have been 220 or 220, but they recorded 20, and when it happens like that, it becomes an error for original entry. I hope that is clear. That is error of original entry. Then error of complete reversal. So the error of complete reversal too, it have certain relation with the original entry. With a complete reversal too, here the correct figures has been used, alright. The correct figure that you should report in the account has been used, alright, but the double entry is not adhered to. Be with me. The correct figures has been applied better, but the double entry is not properly what adhered. Instead of the bookkeeper, the one recording should record, let's say, the item in the debit side of the account, you recorded at the credit side, and instead of recording at the credit side, you recorded at the debit side. So it has interchanged their entry position. I mean, how they should be entered, the debit and credit. Instead of recording at the debit, you record at the credit, and vice versa. So when it happens like that, we count an error of complete reversal, because both of the account has been completely interchanged when it comes in terms of the entry and not the figures, I mean. So here the correct figures has been used, but the double entry is misapplied, or the double entry is not properly adhered to. That's what I mean by the complete reversal. So when anytime there's a complete reversal, right, all that you need to do here is that the error which has been committed, let's say, which the correct figure should have been on the correct entry that should have been made, let's say at the debit side, but made at the credit side, all that you need to do here is that you debit it so that you cancel it off. So when there is an error of complete reversal, and for you to correct it, the one which should have been debited but have been credited, all that you need to do is to debit it so that it will cancel the credit entry. All right. Then the one which has been credited but was debited, you credit it so that it's also cancelled off. Then the actual recording should be done in a correct manner. That's how it should be. But we look at practical question when we explain those concepts better for you to appreciate what we are doing. Then you have error of principle. I hope that is clear from error of machine to complete reversal. If you have any question, kindly put them in the comment section. Then I'll read and give you a response as we move along. Then error of principle. We are saying that with the error of principle, it is a bit similar to error of, I say similar, have certain I shouldn't say similarity, certain features, or let's say it's an opposite to the error of commission. Error of principle here means that there are errors that are made in a different class of account, in a wrong or. So with the error of principle, this is why we are saying that you have is opposite, direct opposite to the error of commission, all right? So the error of principle, we are saying that there are errors which are committed in the wrong class of account. By class of account, we mean this. By class of account, we mean this. By class of account, we mean this. So by class of account, we mean this. ALICE, ALICE, we mean assets, liability, income. capital and what expenses. All right, that's what I mean by what wrong what classification. So with error of principle, there are errors that are made in a wrong class of what account. Let's say if it should have been reported in, let's say, in the asset non-current account, but has been recorded in asset current account, it becomes what error of principle. But has moved from one class towards another class. Let's say it should have been reported in the income statement, but it was reported in the, let's say, capital account. Why? Because remember, those class that they are changing, after all, or all things being equal, they all have what the same what entry. When it comes to their entry, they have the same entry. For example, taking what stocks, which is what a short term, stocks, yeah, as a short term what investment that a business may engage on. So for example, let's say that we purchase stocks for reselling, right? We know stocks an asset, but rather current asset. Instead of we recording the current asset account, we recorded in the non-current asset as a fixed asset account. Remember, assets asset, they all have what? They all asset, they all have debit balance, right? But it becomes an error because it's changing from non-current, that changed from current asset account to the non-current asset. Then that's what I mean by what error of principle. They are made in the wrong class of account, and the reason why it is so is that, and the reason why it is so is that, after all, they all have the same what entry. Asset, they all have debit entry. Capital, liability, they all have the same entry. Credit. So that's why yesterday trial balance will agree. Okay, so that's error of principle. They are made in a wrong class of account. By wrong class of account, by class of account, we mean asset, liability, income, capital, and what expenses. That's what you need to understand from here. Then error of duplication. We are saying that with this error per the name, it's an error that are made more than once, or where recording is done more than once in a books of account. The debit side has been debited, let's say, more than once, and the credit side has been also been credited more than once. And when it happens, it becomes what error of duplication. And when we have error duplication, and depend on the degree of the error that has been occurring, the degree of recording has been occurring as an error, you remove them aside so that you get the correct. And so if, let's say, the debit side has been debited twice, you credit it with one so that you get the other one at debit side. Then if a credit side has been credited twice to debit that account so that you remove one, then you get the correct entry, or the for us to comply with the double entry. That's why we do that, so that you cancel off one figure from it, then you get the exact figure. So that's duplication. Then it comes to error of compensation. Error of compensation here, we are saying that there are errors that are made, all right, that coincidentally turn out to cancel out what each other. Errors that are committed that coincidentally one account turn out to cancel out what another. And when you have such situation happen, you call it what errors of compensation. After all, the debit and credit will cancel off, and yes, so the trial balance will still agree by the same what amount. The emphasis here is also be noted by what the same amount. So when it comes to error of compensation, we are saying that there are those errors which turn out to cancel out each other by the same what amount. Take note, by the same what amount. That's what we mean by the error of what compensation. Let's say, for example, we have sales overcast 500 cedis. Then let's say cash overcast 500 cedis. Remember, when the cash is overcast, the debit side will increase, okay? And when sales overcast, the credit side will increase. Remember, when the two are into play, we got the two. Remember, cash will be at the debit side and the sales will be at the credit side by the same amount, 500, and they will turn out to cancel out each other. 500 will cancel out each other. You're going to still have what the same what balance existing, but that balance they're going to have the trial balance. It's not the correct balance. But yes, still the trial balance agree. You see, that's how such error will play. So when you have such error of compensation, what do you need to do? Where there's an overcast, you reduce it. If it's debit side, you reduce it by crediting it. If it's the credit side, you reduce it by what? Debiting that account, and you get the compensation. Then error of transposition here transposition means the So with error of transposition, we are saying that per the name, there are errors that are committed when the debit side and credit side of the figure or the value you need to enter has been interchanged. All right. So the word here is interchange. When time you have transposition, you're talking about changes of the position of the figures. For example, I have, let's say, 1, 1, 2. All right, as the correct figure should be reported, but when I was recording, I made it 1, 2, 1. When it's happening like I've changed the position of 2 and that of, let's say, this one or this one, and it has resulted in this. So anytime you have such situation, you are talking about what error of transposition. And remember, this 1 to 1 that we actually record as an error was made at the debit side and at the credit side of the trial balance. And yes, so the trial balance, like, because by the same amount that we have recorded, just that it's a mistake, but we have recorded the same figure at the debit side and at the credit side of what that account. And when we reported the trial balance, it's going to be agreeing because we're going to get debit 1 to 1 and credit also to what, and the credit also to what, 1 to 1. So that's what I mean by what error of transposition. Transposition, you mean changes of figures which is done or which is likely to occur, which has occurred in both the debit and the credit side of what, the account. So let's take note of that. So general, that these are the errors that we need to understand when it comes to errors that will not affect the agreement or trouble. And one thing that we need to understand here when it comes to the errors or double-sided errors, they are always corrected using the general proper. Use the general or general proper only when it comes to the correction of errors or double-sided errors. They are only corrected using the general proper only. And anytime you have for the transaction that you were recording the general, remember narration is a key thing that you need to do because it must give us an information about the account or the transaction that you are recording the journal so that you get to understand that, okay, this is transaction I recorded, and so therefore if we take the journal we can know that it was this and that and that. But the narration give us a brief knowledge about what a transaction, which kind of transaction exists in the journal. All right, so that we get to understand how to go about it. So we are saying that journal proper or general journal is used to correct double-sided errors or errors that will not affect the argument of the trial balance. So that is why we bring an end to the first part of the correction of errors and suspense. So I'll see you in the next video where we look at various example under the errors that we have discussed so far so that we know how to correct such errors. So thank you once again for watching this video. If this video was helpful to you, please consider by liking, subscribing, and sharing to as many students as possible. Thank you. I'll be in the next video where we discuss the examples of each errors that we have discussed so far. Thank you. Bye bye.